accordingly, Deborah. So.
Mm-hmm.
Awesome. Well, thank you guys for joining the session on cyber insurance in a dynamic threat landscape. As you can see, this is a very interesting topic, and we have um, quite a lot of attendance, so really, really appreciate it. My name is Sunil Shenoy. I'm the SVP of Business Development and Global Alliances at CyberSaint. Just as a reminder, we will be answering questions that are posted in the Q&A towards the end of the session. So feel free to post the questions as we go through the conversation. So today's topic is going to be on cyber insurance and security. The current challenges for the companies and organizations to get cyber insurance, what they need to plan for, what they're currently doing about it, and how they are incorporating it into the overall business and IT environment. And I'm losing my voice. Nothing to do with technology. We will also be discussing the different perspectives from the insurance company's angle on what they look for, as well as the guidance they potentially provide and the steps or measures they have to take to insure different companies, both from a cybersecurity perspective as well as associated potential losses that they have to pay up on. We have a great panel today. And without further ado, let's get started with introductions. I know Julian's going to be joining. Julian's a gentleman from Marsh Brokers. Let's start with Deborah.
Thank you so much. And I trust you can hear me, and I'm glad this is working. My name is Deborah Decker. I'm Senior Advisor at the Stimson Center, a DC-based nonpartisan think tank. And I work on international security issues. So we've researched over the last several years incentives for security and what benefits can be achieved from evidencing good governance of safety and security with a focus on cybersecurity in the civil nuclear sector. And what we found really applies much more broadly to other industries. And insurance was a big component of this. So we've interacted a lot with different insurers to learn more about it. And I look forward to sharing some of our insights with you.
Excellent. Julian, can you hear us now?
Can Julian, if you say something, can we hear you? You're on mute. Take yourself off mute. Wait, can you unmute him or tell him to unmute?
So quickly, I have a patch suggestion, and I'll drop this in the chat for Julian. But if Julian has the session in a separate tab and almost listen to the audio as an audience member, it might work. Then he can participate. He just has to have it open in two separate tabs.
Okay, well, you got to tell him
We'll
that. Give it a go. And Julian was on mute. Okay.
I think it dropped off. How about we go to Patrick O'Reilly for an intro?
Thanks, Sunil. Yeah, I'm Patrick O'Reilly. I'm the co-founder and chief of product at CyberSaint Security. We're a software as a solution platform dealing primarily in cyber risk management. We get to work with so many different organizations, so many different companies. I get to regularly talk to thought leaders across insurance, the system integrators, some of the largest companies in the world, and small and medium-sized enterprise as well. And our primary focus these days is on automation and cyber risk management. So, insurance is a very big component of that, and it's a very big driver, I think, too, for organizations to better understand their actual risk exposure with respect to cyber. So excited to chat with everyone if they can get here.
All right. While we wait for Julian, let's start with some really common questions, right? So Deborah, tell us about cyber insurance.
Yeah, at large. And I really hope Julian can come on because he represents Marsh Brokers, which is one of the largest in the world, and he's in charge of cyber insurance. So he's the one who's going to really be the expert on this. But basically, there's, as most of y'all know, there's property insurance and there's liability insurance. And property is called first party insurance, like you're insuring yourself and what happens, like a fire or something goes wrong on your premises. And liability is a third party insurance, which is when someone sues you and you've lost data and you've lost their information. And so that's the, if someone wants to type in that Julian has his mute on, I don't know if he intended to do that. And that could be a problem. But anyway, so, and beyond property and liability, there's categories that are separate, like directors and officers liability, errors and omissions, professional liability insurance, and business interruption insurance is something I want you all to think about, because that's usually a rider on a policy and can be a rider to a property casualty policy. And I think that's what I would worry about from a cyber perspective too. Now, cyber policies since I guess about 2017 with NotPetya and WannaCry, I mean, the losses were about $8 billion. These were, and insurers, I think, took a hit, and Julian may know that, of over 3.8 billion or something. And these were all risk policies. And these policies were silent on cyber because I don't think at the time insurers really understood the potential impact of cyber in terms of business continuity and actual losses. So now, especially with Lloyd's leading on this to some extent, we have to have affirmative clauses to say what's included in your policy, what's not included, and cyber is generally a carve out, a separate thing that gets discussed and negotiated. And what Marsh does is look across different insurers, underwriters, to who is the best to serve your needs. So that's kind of a larger overview of the way insurance has been working. I don't know, Sunil, where else you want to take this?
Well, I mean, just to follow up on that, right? So and I know you've been working with Julian for the last few months since we've had this collaboration. How do companies, like Marsh, actually determine the right level of cover?
Actually,
company's perspective too, right? How do they know what needs they have? So
yeah, exactly. So it's really up to the company to do what their risk appetite is. I think Marsh helps them maybe understand what they could be looking at, what they should be looking at, and what the different offerings are. Patty, if you need to jump in at any point, please do and embellish this. But so understanding what you need can be complex. There are some checklists out there that you can look to see, do you want this? Do you have that? And it's really up to the senior management, the owners of a company, to say, I'm going to keep this much. When working in the nuclear sector, for example, a lot of them set up, they were self-insured or set up captives so that this is the civil nuclear sector, and they didn't necessarily seek separate cyber policies. They felt like they could manage it on their own and do it internally. So, I mean, that's a decision for each company to make. Now, if you want to ask how do they get priced? How do the policies get priced? Well, I think Julian would tell you it's probably all over the map, because we don't have any really in-depth analysis yet of what works. I mean, unlike hurricanes, the insurance industry built in Florida this big factory house that had turbojets in it to blow wind at buildings, and to see what type of construction works. So they've had a lot of information and are able to pull that together to differentiate. Well, if you have double screen windows and you have certain type of construction, we can give you some benefits. But we haven't gotten to that concrete of an analysis of what should you need to do to get some benefits in insurance, except for one thing I would say, and I put in my background, good governance. And this goes to you, Patty, because you help companies develop enterprise risk. What is good governance? So we looked at all these different areas of risk, of things that could go wrong and how companies were responding to them, but in particular looking at cyber, and then talk to insurers, talk to Moody's, talk to different ways that you could get benefits to the company. And it was really, the big benefit was not that you had insurance coverage, although that was important, It wasn't that you were following certain standards, although that was important. It was really looking to the governance management model, which I was glad to see that the new NIST Cybersecurity Framework 2.0 now has a governance element. And I read it and I was thinking I need to comment on it because it needs to be more that it goes to a higher level of decision making in the enterprise, that it's not siloed. Oh, this is IT, and that it comes up to the top layer. But let me let Patty, or if Julian's on, someone else maybe get to this.
Deborah, I think that's a great point. I don't know whether you saw the keynote session earlier this morning. It was on AI, and they have 4 pillars, of which govern is one of the first pillars, right? It's govern, map, measure, and manage. So the governance part definitely is. So Patty, following up on what Deborah just mentioned from an industry perspective,
Right.
let's switch gears to more of a technology perspective, right? Companies that are getting ready, from implementing different technologies. So, what are some of the emerging threats that companies should consider? That's one part, and then the second part, relevant to the cybersecurity angle, is how do they ensure that their cybersecurity insurance policy is alignment with the overall risk management strategy that they want to put in place?
Right.
Loaded questions.
Yeah, it's a loaded question, and I think it's been kicking around for quite some time. But essentially, what I hear when I talk to very large companies is, we have to be able to make the case on risk. You can't really insure a thing that you don't sort of understand. And Julian, if I can speak for him, made a brilliant point last time we were chatting about talking to property and casualty, and the people who are in those practices. And he said to them, because he's in cyber risk, he said, "You guys have it easy. Companies come to you and tell you what's the value at risk. They tell you that right away." So I being in cyber risk quantification, we often see that companies are making a lot of progress with respect to their actual practices around cyber risk, but they might not have engagement really yet at the top of the organization. And I think one of the reasons NIST pulled governance out is because the SEC is now saying, you have to demonstrate on your 10K what your cybersecurity risk management practice looks like, sort of at a high level. You don't have to get too specific around the frameworks you work with, but there has to be some engagement, right? That can be considered in and of itself a metric, whereby you're doing risk management, and that can help the insurers understand, what your risk posture is. If there's no engagement, you can be sitting around and measuring things, all day long, and it's not accepted, at the enterprise level. So there's, a lot of confusion, I think, still in the market around these things. But Julian has, done a beautiful job explaining, how policies have been written and tailored. And do we have Julian, for example? I kind of hear some noise. Julian,
I might be on. I can hear you.
Yes.
Hey.
I've been speaking for you. I've been quoting you in previous sessions. So
what did I say? Was I saying good things?
You were good. You said this great thing about that I've used already, like a few times, about property and casualty and how they have it easy. People understand the value of risk, and you're in cyber, and you actually have to help companies decide what their actual exposures are.
That's right. Yeah. Sorry, everybody, for the issues on getting on and up and rolling. Now 20 minutes late. Don't let me stop things, or Sunil, if you want to.
So Julian, Patty was just giving the perspective from a more of a technology perspective. Deborah started us off with the needs from a cyber insurance perspective. So if you want to just give a brief intro about yourself, your role at Marsh, and then just talk about the industry in general, just the overview, and then we can just segue right into the follow-up questions.
Absolutely. So thanks, everybody. My name is Julian Silvestro. I'm a senior vice president in Marsh's national cyber practice. I sit in Cincinnati, Ohio, and frequently work with folks in both New York and Chicago, are kind of my two main haunts, I suppose. I work almost exclusively with organizations, large organizations now, but throughout my career, I've worked with everything from small nonprofits to Fortune 10 clients. So I do come at this from a pretty broad background in the insurance side. I've also spent some time on the incident response side of the world, and got a chance to kind of see from the responders kind of how insurance works and how insurance reacts and responds. In terms of the cyber insurance industry and what cyber insurance is, I think it's important to for everyone to think of cyber insurance as the financial mechanism that it really is, right? It's a way of displacing risk from your balance sheet, as is any type of insurance. There's some things that we built into cyber insurance programs for the most part that make it a little bit more provide a little bit more utility. So, things that you may have heard of like vendor panels and things like that, where if you don't know who to call when things get nasty, we've got some folks who we know what they're doing. I think one of the struggles in cybersecurity generally is, how do you know the person on the other end of the line really knows what it is that they're doing, right? And so I think, working with quality firms is a very important piece to responding to events appropriately. I often affectionately refer to our life cycle in the cyber insurance space right now as being kind of at the end of the beginning. So we're through our first existential crisis, let's say. We've gotten our driver's license. We know we're not, just kind of crazy out there doing things that really can't be done for a long period of time. The insurance industry has been supporting cyber risk for, a little bit over 25 years now. And so I think we're starting to hit this very nice point where, the underwriting is getting some more clarity to it, which is a positive thing. And we're also now able to pull more insights out of the loss data and the loss activity, right? For the first 20 years, what we struggled with was to be able to say, here's all the losses that we've seen, and here's what the takeaways from those losses are. I think we're getting to that inflection point of being able to really pull on the thread and drive understanding out of, well, here's what we're seeing from a claims standpoint. Let that inform the way that we manage risk, the way that we address cyber risk. And I think that's a really important inflection point. So really excited and happy to finally be here talking with you all today. So with that, maybe Sunil, I'll turn it over to you.
I think that's a great segue. So we were talking about the overview, the different technologies. So along those lines of what you just mentioned, right, looks like it's not just enough for companies to invest in different technologies, right? But what does this mean in terms of actual risk or potential losses they face if they don't cover certain elements, right? That's what companies have to be very proactive about, and they can't just put that at the back burner thinking, oh, well, I'm going to get insured and it covers. They have to be more proactive, right? So considering that, what do you think companies have to look for? Because from what we understand, and I'm pretty sure the audience will agree here, is there are a bunch of different cyber insurance policies, right? So as a company, if we want to get insured, what are the different policies and providers that come into consideration?
Yeah, it's a great question. We have a diverse and robust marketplace of folks that operate in the cyber insurance space. I think the biggest key is having a broker that you can ask questions to, and someone who you can say, hey, I don't understand this, explain it to me. That's what your broker is there for. So I think a lot of times the insurance industry as a whole is misunderstood. And just as a level set, a broker, so someone who sits in the seat that I sit in, our role is to represent our clients to the insurance industry. We represent our clients to the market. That is different from what most people are used to in insurance, where they call the State Farm agent and the State Farm agent says, oh, we'll cover your auto and your house and whatever. That's what's considered a captive agent. So they technically work on State Farm's behalf, representing State Farm to you. Now, why did I even bring that up? Because a broker is there to be your outsourced resource for procuring insurance, understanding risk. And so dealing with a broker who can help you understand what the coverages are, what the insuring agreements are, how the policy reads, what belongs in a cyber insurance policy versus what belongs in something like a crime policy. So I think from a very, very high level, super generic, this applies in all situations, I would say get a broker that you feel like you can trust, a broker that you feel like you can ask questions to, and who gives you the time of day when you ask those questions to actually respond with, a real answer. The typical insurance answer that you'll hear to almost every question is it depends, because we love to live in that nice gray area. So getting beyond that, oh, it depends, is a very important thing. So talking to your broker is important. The other very unpopular thing that I usually say, and the whole panel is going to laugh at this because I said it last time, is read the actual policy. If you read the actual policy, you'd be amazed at how much you will learn about what the policy covers. It's not a fun activity necessarily, always. I will own up to that. But it is a really critically important one.
But they're so long. They're so arduous. I mean,
They are.
In our home, we have Chubb. I get this booklet, just my house, this thick. It's like,
right.
Okay, this is covered, this is not covered for business. And then you
They're
have to
extensive.
pay your lawyer. Then you have to pay your lawyer, who's, if you're a big company, it's like $750 to $1,000 an hour. They're not going to read it. So who should you be getting to read the policy? What level? I think it's important to think, what level person should be understanding this policy?
Yep, that's a great question. So your broker should always be able to help you understand what your policy says, right? That's bare minimum baseline. If they can't do that, you need to call somebody else, and you need to go and work with somebody who can actually talk you through the policy. Usually when I talk policy language, I am dealing with general counsel, inside counsel, somebody on that legal side who understands how contracts work, how contract language works. Generally speaking, when you're going to read through a policy, you kind of do it in at least we on the insurance side do it in kind of a stage process, right? At first, you read your insuring agreements. That tells you what is insured, right? Then I usually tell people to read the definitions that apply directly to those insuring agreements. Now, the reason policies are very, very long is because there's a million definitions, right? Everything needs a definition to it. So I will say, read your insuring agreements, read the definitions that are in those insuring agreements first, and then read back through the exclusions. And then if there's an exclusion that catches your eye and there's a defined term in there that you haven't previously looked at, go back through and look through those definitions. Now, there's obviously a lot more parts of an insurance policy than just those three pieces. But if you just understand those key three parts, insuring agreements, definitions within those insuring agreements, and exclusions, you're 95% through the meat and potatoes of what the policy actually covers and how it actually works.
That's great from the policy perspective, but when it comes to the nitty-gritty details, how are the premiums actually determined by the insurers, right? And what factors, from a company's perspective, what factors that they can look for? So if I'm reading the fine print, then I want to make sure that I'm addressing the fine print to lower my cost, right? So Can you shed some light on that? And maybe Deborah, you can help out.
Yeah. So, I'm disclosure, I'm not an underwriter. I've never been an underwriter, but I've been doing this for a while. And I know that every insurance company has their own underwriting system, underwriting platform, and underwriting model, right? So basically what that means is that every insurer is going to have a little bit of a different appetite. That's the benefit of an open market environment where we've got folks that are very comfortable with financial institutions and then other insurers that won't touch a bank or a banking institution. There's levels of confidence and understanding of those businesses. So first, I think it's understanding and working with your broker to pick the right insurance companies to approach, because unless you're working, unless you're a Fortune 100 and you want to buy $500 million worth of insurance, you probably don't need to approach the entirety of the insurance market. It's probably going to be too much, too difficult, all of that. The insurers all apply their own calculus in terms of exposure and rating. At Marsh, we try to help clients understand that a bit by providing things like modeling and analytics, right? If you understand where your exposures are, then you can understand how an underwriter is going to think about those exposures. Sunil, you made a good point about what are the coverages and things that I may be able to leave out of my policy that don't apply to me.
Yeah.
The interesting thing about insurance is if your policy has some coverages that, let's say are minimally impactful, similarly, you're probably not getting charged for those very much, right? The insurers charge you for the things that they see as potential loss areas. And yeah, there are some enhancements here, there, wherever that may have some additional premium associated with them. But generally speaking, if you have a very low, let's say you're a manufacturer and you have a very significant exposure to business interruption, downtime events, but not that much of an exposure to, a privacy breach event, you're not really going to get rated the same as a retail organization that may have 150 million, client or customer records for the customer marketing system. So I would say be careful when you're trying to carve things out of a policy, because those things that you may not feel like are impactful, you're probably not really getting charged for anyway. And if you are, it may be 2%. And, maybe that's not maybe that's not so expensive that you would say, well, maybe there's like a very off chance that I do have some event in that area. Maybe 2% is reasonable. Maybe that makes sense. Maybe that works for me.
Can I jump in on this? Because
Yes.
when we were looking for incentives for security and thinking that, insurance could be an incentive, we come to find out that insurers don't charge based on risk. I mean, marginally they do, but they're underwriters. They run these models and analytics. But first of all, as Julian pointed out early on, we're kind of in the early stages of cyber because everything's not necessarily being reported to anyone. So we don't know. And we'll get to required reporting in a couple of years, at least for ransomware in the United States and in other countries. So we don't have enough information anyway. Then secondly, so you get this big analysis of where, assuming you have the data, which we don't have yet, of where the risks might be. And then you say, well, let me see. This cyber insurance is what piece of my relationship with that company that's being insured. I mean, if you've got a big other policies, with them and you're a good client, maybe it's a small risk, then they'll put it as part of the package. The other thing that you have to think about is whether or not you have what the portfolio returns are for that company. So the insurance company, when you pay your policy premium, it goes into, they get money back. I mean, they invest it and they'll say, how are we doing in the marketplace? What kind of returns am I getting? You're going to say, how competitive, who's else is out there in that area? And then the other thing they'll look at is how much exposure do I already have? It could be in your area of the country. It could be in your industry. There was this recent study that came out about the relative risks of different industries in cyberspace. So, they're going to weigh all that before they charge you. And then when they get to the answer of, like, I was talking to Lloyd's about, how do you charge? And do you look at things like in England, we have here the cybersecurity framework. They developed something in the UK called Cyber Essentials Scheme. And I talked to the person who had developed that. You can get certified by the government that you're compliant with Cyber Essentials. But on the other hand, it's not really that good of a cover, I don't think, for how risky you are. So it's not clear how they can price off of that. So we don't have that data, but I'll turn it back to y'all.
Yeah, very, very, very insightful. I know. Let's go on. Go to the tech side of things, Patty. So, what role can technology play in improving the accuracy of cyber insurance risk assessments that'll help
Yeah.
companies?
Yeah, well, I think obviously there's a lot of great crowdsourced sort of wisdom of the crowd stuff that's already out there on cyber, right? So when we're working with the system integrators or the insurers, the CSF is in wide adoption. It's there, and how you're doing on the CSF. Do we have empirical studies that relate the CSF to breach likelihood with good regressions and good data on that? Well, it's been tried. We're not quite there yet, but nonetheless, as a proxy, it's well understood that if you're working with a generally accepted framework, working with a control set or regulatory standards that are stringent, and you have an information security program and you define maturity in some way, shape, or form, that can be a good proxy for insurers to work with, and we can help. We help organizations operationalize all that. We also do a thing, I think, that's helpful, and this is sort of like we're all sort of in the long slog toward the promised land. The promised land, obviously, is that we've got perfect actuarial data sets that inform perfect decisions across the critical infrastructure sectors, and we all understand the loss models, and we can sort of repeat this stuff in our sleep. But in reality, each sector is different, each organization is different, each team is different. One of the things we do with technology is we do have an actuarial data set. It's 1 million rows. We've got 15 loss event types. We've got 19 vectors. It can be queried. It's guidance. It's not perfect. It's not all the way there. It doesn't rival the data sets and life expectancy. It doesn't rival the data sets when it comes to car crashes or where you garage your vehicle or the telematics you get from a dashboard. But it's a beginning. So it's a stake in the ground, and technology is really helping to do that. And I think when I talk to large firms, what they're struggling to do now is define risk across different functions, right? They're trying to get buy-in across different functions so they can actually decide what their appetite is, and their appetite for new technology or new initiatives or new strategic initiatives might be high, but they need to understand the cyber risk that's related to that. There's some types of cyber loss that are pretty clearly understood at this point, and that's a part of appetite too. Can we live with the likelihood that an event is going to happen every 10 years on this with an average loss value of X? That's stuff we do in the platform too. But it's really about getting a conceptual framework in place to have the conversation so that you could actually read your policy, and buy it, So, I see our role as enabling companies to break down the silos and have the conversation around risk and around cyber risk. That's really our role in technology.
Yeah, I think if I may add to that, right, based on my own experience, what I've seen is a lot of these tasks, quote unquote, cyber hygiene tasks, have been done manually, and we are at a point of inflection now where that's just not sustainable, right? They have to have automation platforms. They have to have consistent, like the recent SEC regulations that's going to hold public companies responsible on reporting. So you really can't try to continue the same paths because technology is evolving so fast, and so is cybersecurity from that perspective. So how can they address these challenges, Patty, in terms of archaic? I wouldn't say archaic, but used to habits, right? And they have to change that. There has to be a mind shift.
Business process change, right?
Yep.
And we all see it. We've been in business long enough in our software company to have had interactions with large multinational companies when we've gone down to the middle tier, that maybe the second line of defense, and they will wave a broken spreadsheet at us and be like, "This is it. This is the source of truth. This is our thing. We're going to roll with it." And we'll I'll give it to my dev team and I'll say, "Does this make any sense?" And they're like, "There are 40 errors in it." And you might go back to them and say, maybe that spreadsheet, maybe you should be thinking about, getting everyone into the same system and having a central system of record and automating some controls so you don't have, human error, taking another look at the formula, some of them, and we've actually seen companies say, nope, nope, it's good. So business process change, the dirty secret of cyber sometimes is that, it's almost been performed historically by monks, and nuns, by candlelight in spreadsheets, and that's got to stop. That's got, that just has to stop, because everyone needs to see this data and everyone needs to understand it. And that includes the leadership. And in order to do that, you've got to translate it. You've got to translate it across all these functions, and it can't just be in some kludgy, spreadsheet with, VBA that's broken, and everyone's like, well, it's just my job. I own this sheet, so automation is vitally important. And I think the most forward-leaning companies in the world are pushing very hard on that right now. And that's excellent. And all the things we learn on that are going to transfer down the line to companies that might be slightly lower maturity, but they're going to inherit some of the innovation around that.
Yeah, it's interesting. I think there's a concurrent session going on CEO reporting, right? So this sort of makes it way all the way up to board level reporting.
To your point,
so. Go ahead.
What was that? There was one big cyber event where the company had continuous detection systems and all that, but no one was looking at them, and so things stayed. The spikes were in there, but if anybody had been looking at them, then they would have known that things were abnormal. But now, you want to talk a little bit more about how continuous detection systems can be applied? And then on the other side of it, though, I worry about those because one of the things I saw in the nuclear sector is this trend toward automation. And if the detection system goes wrong, then you're really messed up. So you have to kind of have a backup, a double backup, and response planning. So if one of y'all want to talk about that.
Well, there's all these great products out there, right? The government even has something called Einstein, and you'd think the Einstein system would be absolutely, ironclad, bulletproof. The truth is, no individual approach is, totally bulletproof. There's deterministic and statistical. There's AI-based systems that do this. The real point is to understand your risk in terms across the stack, across the entire stack. There are going to be times when no one's looking. There's going to be times when systems miss certain things. There are going to be 0 days. There's going to be Black Swan events, right? The real point of cyber risk is to understand all that holistically. And if there is a project that can improve the resilience of the company, you understand that budget for that. You understand the initiative in light of the loss values. So you have some idea of the security return on investment. If you have some idea of that, you can socialize that upstairs, right? If you don't, what do you do? You're going and proposing yet another endpoint solution that claims to boil the ocean, and no one understands what it does. So you might have 100 beautiful telemetries plugged into IT with a few people down there who understand it, but you can't rationalize your security program in terms of the actual return on investment for spend. And if you can't do that, you certainly can't buy insurance either.
Yeah. Very, very interesting. So let's switch gears and talk about claims, right? Once the damage has been done. So Julian, I know you're smiling there. So how can companies best prepare for the claims process in the event, there is a cyber incident that results in a financial loss or impacts?
Yeah, so this is something very near and dear to my heart, obviously. I think it's important to certainly think about your worst day before you have your worst day.
Yeah.
The number of folks that I've seen throughout my career who, when we were going through underwriting, they said, oh, we've got incident response plans. Oh, I know exactly how to do things. And the number of folks that I've seen falter when it actually comes time to do that, to pull that incident response plan out, to practice it, to function it, to make a claim, to work with their insurers. I think the only way you can prepare yourself to do those things is to communicate with your insurer beforehand. What I always tell my clients is, look, you need to have some working relationship with your primary insurer claims team before you actually need them. Like, I do not want to be introducing you to your claims team when your hair is on fire and, you know, everybody's looking at you going, what's happening with this event, right? So I think it's really important to, at the very least, understand the insurance process around claims. A lot of times, you know, the insurers won't start paying your expenses until you've made notice to them, right? So you should be making notice to your insurers and then engaging with those vendors to get them working. Otherwise, you could find yourself with, you know, bills that stack up that aren't going to end up getting paid. You know, I think there is oftentimes a lot of conversation around claims not getting paid. Everybody loves that because, you know, everybody loves a bad guy, and insurance is over the history of the world, insurance has seemed to be an easy bad guy, right? So what I can tell you from being a person who sat exclusively in the cyber insurance space for my career is I really don't see claims on the cyber insurance side get denied. The big denial that we saw around war exclusion was actually not a cyber insurance policy. It was an all risk property policy that had some legacy wording that was creating issues for that insurer. They ended up losing that suit. And as you can imagine, immediately as a result of that, a lot of people changed their wordings because they said, ooh, that wording doesn't work. I need to have one that does. So I think, you know, generally speaking, I see clients, as long as they've been truthful and upfront in the underwriting process, I don't see friction on the claim side. Now, that brings up the next point, which is if you have lied on your application, A, you've probably committed fraud now. And B, at best, you've committed a misrepresentation, which may void your insurance policy. So it's important to be truthful and clear on your application for insurance. That's why I always tell people, don't just answer those yes, no questions, just yes or no. Include a Word document that has, you know, some additional clarity things, because I don't know anybody that lives in a world that's completely black and white, and certainly nobody that lives in the cybersecurity domain lives in a world that's completely black and white. So I think it's important to just make sure that you are communicating clearly with when you're going to apply for insurance, and then getting in touch with those claims people ahead of time. It will save you a world of frustration and pain. And then also, you know, a lot of brokers now have claim support. So making sure that those folks are involved as well, because they can help negotiate with the carriers, the insurance companies, and making sure that they're living up to their obligations that they promised in the four corners of the contract.
So,
Can I ask-
Julian, that's interesting, right? Because if you know, the claims process gets denied, can be potentially due to some exclusion. So from a company's perspective, and Deborah, you can chime in here too. What are some of the common exclusions? And if I know as a you know, company that these are excluded, how do I protect myself, or what kind of advice do you guys offer?
Sure. So every policy has exclusions, right? There's no insurance policy out there that doesn't have exclusions. Most of them have, you know, call it in the realm of 20 to 25 standard exclusions, right? Most exclusions point to another policy that's more appropriate than whatever policy you're looking at. So, for instance, there will be an exclusion for 401k accounts and things that points to a fiduciary policy. There's going to be exclusions for claims brought by employees. That's going to be built more for an employment practices policy. So once you get through all of those, you then have things like war. War is an exclusion that's on pretty much every policy out there. There are some fringe war markets and things that can do some coverage around those. It's important to understand the war exclusion, because what is cyber war? What is not cyber war? That's an important one to understand. There are what's called insured versus insured exclusions. Those are important to understand because you want to understand when a claim brought by an individual or brought by a group of individuals may not be covered because they had knowledge of the insurance policy in place, right? Not that you have insurance, but the details of how insurance functions. There's, I've seen exclusions for things like keeping security systems and things updated. Those are really toxic and bad. You need to watch out for those and try and get those removed if they're on your policy. I would say as you look through a policy and as you look through, if you're rummaging through your policy right now, frantically, as I talk, if an exclusion doesn't look right or feel right, ask your broker about it, because they either probably have an explanation. Oh, hey, this actually goes to a directors and officers policy or something like that. Or they would say, we kind of mentioned that. We talked about it. If they don't have either one of those answers, it's a really good thing that you brought it up. So pay attention to those wordings, those exclusions. Again, there's about 26, 27 of them, just depending on what insurer you go with. But I would make sure that you have a pretty good understanding of how those read. The other one that you will see, and this is one that nobody likes, but really needs to be there, is called the infrastructure exclusion. So the infrastructure exclusion is for things like outage of power utilities. Now internet service provider is on there, telecommunications networks. The reason for that exclusion is to protect the insurance industry from what's called a systemic cat loss, right? A systemic cat loss is something that could impair the entirety of the industry from functioning, right? It's what we are all concerned about happening with hey, something's not right, Microsoft Exchange vulnerability. That was very concerning for a lot of us, because you look at that and you think, okay, how many organizations are using on-prem Exchange? The number's not insignificant, right? And then how much capacity and how much capital is in the insurance market that could support a loss that spanned all across their portfolio? So those are the types of things that we also have to worry about. And sometimes you will see exclusions that address some of those systemic issues to try and protect the industry from taking a hit so large that next year, if you went to go renew a policy, they would say, sorry, we don't have a market for that anymore.
So can I ask if any of the the new warlike exclusions have been tested yet? Because the policy wording around those, well, first of all, there's a number of different ones that Lloyd's put out, as you know, clauses, but it is so vague, or you've got 4 years, just a huge amount of time to have attribution for a warlike act, if it's a cyber thing. And I was trying to look up Viasat, and when their satellites got shot down over Ukraine, and I know they're having problems now. We won't go into that one, but I was looking back to say, were those insured, and were those covered? And we all know that Russia did that, but I haven't seen anything written in insurance journals about that.
So I can't speak to any individual situation, but what I can tell you is I haven't myself experienced any war exclusions on the cyber policies come into play yet. What you will hear from most insurers is that we have not even seen a scenario which would trigger a war exclusion. Now, the caveat that I would provide to that is oftentimes what we look at for a war event is the NotPetya attack in 2017, right? Mm-hmm. The one where we had a property policy, they invoke a war exclusion, the war exclusion goes through, many iterations of court hearings, and it was found that the insurer cannot depend on that war exclusion. The caveat that I mentioned is, if today, in the current status of the war between Russia and Ukraine, if the NotPetya event had occurred, because there is a war actually going on, that likely would have triggered some of the exclusionary language that we have right now, because that would be a warlike event between two adversaries, right? It was a Russian threat group against a Ukrainian accounting software platform. So that's not to say that I could not fathom a scenario in which they occur. But I do also think that the war exclusion language, at least that Marsh is pushing for and has gotten agreed to by most insurers, actually, in my mind, provides more clarity than anything.
Clarity
You
is
know, clarity is important, right? We write legal contracts, and if we have these exclusions in here for war, and we only have one defined term within that exclusion, I think that's not actually in the client's best interest because it's so ambiguous that you really have to depend on a court to make a decision on that. And I don't think it's worth spending, 6, 7, 8 figures on an insurance program and going, gee, I hope I get the right jurisdiction for whatever claim, right? I would much rather have more clarity up front. And I think that's what the new war wordings are doing. There's more defined terms. It's much clearer when it's triggered, when it's not. And I think we've done a good job of putting a ring fence around what realistically should be excluded that is truly a severity cat event, and what is something that maybe insurers don't love, they're not jazzed about, but they really should be on the hook for.
So how, and I'm sorry, Sunil, I'm kind of usurping your role here a little bit. But
yeah, we need to wrap up in a few minutes.
Okay, but to what extent is that terminology compliant with what Lloyd's has suggested in their war and warlike acts exclusion? So then you would have the option of going to some of the Lloyd's brokers.
Yep. Yeah, so we have a war approved wording. We were the first and for a long time the only brokerage to approach the LMA and say, hey, these war wordings are not okay for our clients. That's one of the things that I take great pride at working at Marsh, is that we really have put our money where our mouth is and gone in front of the LMA and said, you've narrowed this policy too much. This is inappropriate.
Market Association, just for the Lloyd's Market. Yes. Okay. Yeah, I heard that there was a lot of pushback. And can I ask Patty a question too? So I'm curious about software supply chain documentation and how important that is for a company to have, an organization to have. They're talking about it now that you should have your, know everything.
Yeah. Well, know everything in software supply chain are two concepts I haven't really heard linked together all that often.
That's the ideal. That's the ideal.
Well, yeah, but it's, the issue is that it's tremendously complex, and I think that NIST released some great guidance on that, some software supply chain guidance, and software bill of materials is going to be baked into contracts going forward federally. I know that the organizations that do their due diligence with respect to the softwares they contract with are in a much better position. I would say that we're working with IBM in their marketplace, and they have vendors, and the process around vetting those vendors and making sure those vendors are doing the required security practices. We're automating some of that. So there's been some real progress in that area for sure, but it's still a work in progress because that's one of the stickiest, most complex problems in cyber because there's just so many nodes. There's a lot to stay on top of. But,
it's great to hear that you're going forward with that work, though. Thank you.
Oh yeah, absolutely.
Mm-hmm.
So I know we are almost up on time. There was a question, and I'll read this out to the panel, and Julian, you or Deborah can take it. It says, most of the companies have digital twins and operation in the field. Operation in the field gives feedback to design back office. Let us say there is a cyber attack in the operation. And if this is fed back to back digital twin, right? Can insurance make reference this feedback when processing insurance claim for damage?
So if I'm understanding correctly, we're talking about fully active
backup. I would say a total backup.
Yeah, like a hot site, more or less.
So that there's like Estonia.
It's along the lines of what you mentioned, right? And I think, Deborah, you said about the backup in Control I, right? So
yeah, so therefore there's no loss, I would guess, right? If you've got a full backup.
Yeah, I mean that's a good situation, right? Like if you have such in-time redundancy, then you've protected yourself from some type of event. What I often see, though, is that there is not a clear enough separation between those things, right? And so a vulnerability or virus or threat that comes into one gets kind of ushered immediately into that hot site or that backup. That's where I get a little bit concerned, but certainly having more redundancy is better, right? I think a lot of times what we talk about around cyber insurance is your resiliency. It's the idea that you could protect and keep out every threat actor all of the time, I think is just not realistic. And so the thought is, okay, well, if that's not realistic, then how do we prepare for what our worst day could look like? Redundancy is a great way to do that. It's not completely 100% foolproof. And oftentimes organizations that do have significant redundancy, they will have it, but they won't frequently practice the switchover, right? And a lot of times we'll see difficulty, frustration, issues in that switchover of, okay, we're going from, the current, production environment over to this backup, and people just assume that it's a flip of the switch. And usually it's not quite that directly, simple.
Makes sense. All right. I know we are at the end of a session. I would like to ask the panel one last question here. Looking ahead, how do you see the cyber insurance landscape evolving? Julian, you did mention about the driver's license, and we are at the end of the beginning. But what do you see the roadmap a few years from now? So you can take the mic, then Deborah, and then Patty from a tech perspective.
Sure. So I see a couple of things. One, I see a federal backstop, I hope. That would be really great. I think that would be a really good thing. Two, I think that there needs to be more capacity available in the marketplace. I think there needs to be more insurers that are willing to offer more insurance limit. I compare that to property. Organizations that have large properties, programs don't have issues getting to $3 billion worth of coverage. That's not available in the cyberspace. So for larger organizations, I think there needs to be some more of that. And then the last piece is, I think that we will see a development in more continuous monitoring of environments, right? When you apply for cyber insurance, you give them a snapshot in time of, here's what my security profile looks like today. But what's to say that tomorrow you say, well, I'm going to turn off MFA because my salespeople say it's a pain when they're on the road. And so we'll just put it away. And then next year for the renewal, we'll pull it back out. And we'll say, oh yeah, we have MFA, right? I think showing that continuous, consistent approach to good cybersecurity hygiene is something that the industry desperately needs, and is something that I think we'll see come to reality here in not too distant future.
Awesome. Deborah?
Well, I hope Patty builds that well into his model so he can demonstrate it, because unfortunately that information is not being gathered sufficiently now. And in my discussion with the Insurance Information Institute, they said, hey, yeah, we'd love to sign on and do that. I said, I don't have more research capacity to do something like that, but I pushed it to MITRE and I said, go for some funding to do that kind of in-depth analysis that's being done in the market elsewhere. Well, historically in property and losses and hurricanes and floods, but in the future, the Property and Casualty Insurers Association here told me they would prefer not to have the backstop. This was like a year and a half ago. They thought the market was working fine, but that was a year and a half ago. When you look at what's changed with ransomware and all that, and so in talking to Homeland Security, they and Treasury will be looking to have a report on whether or not we'll have a federal backstop, but not until 2 more years at least. It was supposed to come out this year, but then the ransomware reporting regulations haven't come out yet, so they're going to wait for that. So we'll know more about where that goes in the future.
Yeah, and from my point of view, because we get to work with great companies like Marsh, we're coming to sort of a point in time where, control automation, the continuous risk assessment, the continuous posture analysis is going to relate to the data loss pooling. It's going to happen. We're already automating control frameworks. Once that becomes sort of, widely accepted across the largest organizations in the world, and we're in the middle of it right now, that's going to have the insurers are going to have access to that information as well. Those things are going to change the way they write policies, and it's just going to get more efficient. The market right now is trying to get more efficient, and we're getting there. So I'm very optimistic actually about that, because point in time analysis is just almost useless these days.
Excellent. Thank you, guys. Every time I talk to you guys, I'm personally learning more. I really appreciate your time, and big thank you to the audience for putting up with us on the initial technical difficulty logistics here. And hope you guys derived a lot of knowledge about, or at least a little more knowledge on cyber insurance and the likes and the challenges. So I know that this session will be recorded, so you can definitely use it for reference in the future. And also, some of our panel members may be hanging around on the networking session. So I encourage all the attendees to interact there as well. So with that, signing off. Thanks again. Thanks, Patty, Julian.
Thank you.
Thanks all.
Thank you.
Talk to you guys soon.
Good to see you.